market's obsession with, let's say, technology, AI, is of a completely different magnitude today. It creates bubble type effects, and that's what I get reminded of at various points in time. Most of them have been led by technology cycles. So when you think of it from the Y2K standpoint in 2002, then even things like cloud and so on, and now in the age of AI. But that is something which constantly keeps repeating itself, and that's something which I find is keeps reappearing.
Welcome to Learn from the Masters, the podcast where we bring you conversations with some of the most seasoned investors and market thinkers in India. Whether it's equity strategies, asset allocation, macroeconomic trends, or building a resilient portfolio, every episode is designed to make you smarter and more informed. Today's guest is Tahir Badshah, President and Chief Investment Officer at Invesco Mutual Fund, where he oversees the equity and fixed income investment function at the firm. Tahir brings over 30 years of experience navigating the Indian equity markets across multiple economic cycles. He's been with Invesco Asset Management India for over 9 years. Prior to this, he served as the head of equities at Motilal Oswal Asset Management, leading the equity investment team. Earlier in his career, he's worked with organizations including Kotak Mahindra Investment Advisors, ICICI Prudential Asset Management, and Alliance Capital Asset Management. Over the course of his career, Tahir has built deep expertise across large cap, mid cap, and multi-asset strategies and is widely regarded as one of the most respected voices in Indian asset management industry. We're delighted to have him on the show today, so let's get straight into it. Tahir, welcome to the show.
Thank you, Avanne, for having me.
So let's get started then, because you've seen multiple cycles over the past many decades. I want to understand from you right now, if you're looking at the Indian markets and the Indian investment landscape, what has changed the most over the years?
So I think a lot of things have changed over the years. But something which has been fairly striking is the fact that Indian enterprises over a period of time have actually grown. I think I remember I started my career approximately 30 years ago. And at that time, there was a relatively limited set of enterprises or corporates to look at, or even stocks to probably think about. Obviously, that landscape has significantly expanded over the last good number of years. And more importantly, I think quite a number of Indian businesses over a period of time have evolved, matured, maybe even dominated some of the hitherto unexploited domains of corporates in India. So I think in a way that has been that evolution, which alongside which of course has also opened up a lot of investment opportunities for investors. But that I think has been the most significant change that I see from let's say 20 years back or 30 years ago. I think the size and scale of these corporates have really become a lot larger, especially, and that is why something like mid-small investing, mid-cap, small-cap investing has actually become a rage in the last some years, and that's to do with nothing else but the fact that that inflection point has reached, where many companies have gone through business cycles. They have had managements which have seen through thick and thin. They have executed well. Many of them have executed well and have become reasonably prominent. Their ability to actually compete with some of the large companies or the large scale enterprises, large business groups, has become relatively larger. They've become probably leaders in many business lines where large companies are not present. So I think that changing landscape, and of course it brings in a lot more challenges along with it as well, but that's the most significant change I think I would have probably.
So Tahir, you've been through so many cycles, the booms, the busts, the highs, the lows. Tell us what the most important investment lessons you've learned along the way.
So one very clear important lesson for me has been that try to keep a good professional distance between yourself and the stock that you're invested in. I think at times investors have a tendency to become too attached, too emotional about things. I don't really think you need to probably become very sentimental about the investment choices that you have made. if you were to probably keep that distance, you will probably be able to think better, think more rationally, and not overdo things. So that, I think, probably to my mind is something which I try and better myself every day on. Uh, Investors also try to overthink. It's not as difficult. Things can be kept simple, especially if you're a long-term investor. You don't need to kind of try and hustle around every now and then. So I think these are two of my primary lessons in my view. I think they are more to do with psychology and temperament rather than.
No, but EQ is equally important, as the IQ, right? Have that emotional quotient, and the temperament is absolutely critical.
Absolutely. No, I think in fact it has an even larger bearing. It's
Correct.
stock selection and portfolio construction are probably important scientific elements. But at the end of the day, how you would perform with regard to your investment outcomes versus your next door neighbor would probably depend a lot on how your temperament is and how do you handle tough situations.
Correct.
And tough situations keep coming every now and then.
Absolutely.
So to that extent, I think that makes a real big difference in terms of overall investment outcomes.
So where are we at right now? I mean, there's been so much volatility, headlines changing by the day. Is India at the cusp or at the start of multi-decadal wealth creation? Have we already gone on that path? Have we seen a lot of it having passed? What's the outlook?
So it's an evolving landscape. I mean, things are probably significantly different from what they were 30 years back when, let's say, I started my investment career, and they are reasonably different from what they are 10 years back, and probably they are going to be quite different as we can all imagine 5 years from now or 10 years from now. So it all depends on where, how things change. But I think, I would like to think that India is at more like a mid-cycle in terms of in its own journey as a country and as an investment destination. It also then is a function of how we evolve ourselves. It is going to be dependent on us as to how we reinvent ourselves or how we reimagine ourselves in the global context. So, for example, I think we have this whole backdrop right now where many countries want to start looking inwards. They want to probably deglobalize in a way. Many countries are becoming more and more selfish about their own interests and self-interests. And to that extent, and maybe India too is thinking in that direction. And that would probably mean our choices over the next 5, 10, 20 years is going to be a lot different compared to what it has been in the last 10, 15 years. It depends on what is the route that we take. For example, services has dominated our economy in the last good number of decades. Over time, can we make that switch to manufacturing over a period of time? If that were to happen, then we probably have a different journey compared to what we would probably do otherwise. Tech is an important force, which we all know has been, acting in several ways on all of us. It's all about also responding to that challenge, those challenges which arise along the way. So our journey will be determined by how we respond and how we want to position ourselves, and that probably will also determine our journey as investors in our economy and the outcomes therefore.
So what do you think will be the biggest drivers for earnings growth in the coming quarters for corporate India?
So I think multiple drivers are actually at work. I think the most important from an India standpoint, and especially if I'm looking at not the next 10 or 20 years, but at least over the next 3, 5, 7 years, is going to be India's ability to spend on itself, especially public expenditure. That is something which will be a very critical lever to shape corporate earnings. I think if you just recall the last 3, 4 years, particularly after COVID, um, we went through a period where public expenditure, capital expenditure, especially by the government of India, uh, meaningfully went up, compared to many years of the past. And I think that produced some very different outcomes in terms of spawning a lot of growth across various industries, maybe even creating relatively high level of jobs compared to what we had been able to do in the past. And probably growth became a lot more inclusive, I would like to think. I think that is something which will still remain a very primary element of overall demand growth for the economy and therefore for corporate India. I think consumption at one level is still quite underrated from an India standpoint. I would like to think that that's something which will evolve meaningfully as well. But in there, it'll be more about changing consumer behavior. It will probably be about different kinds of strata of population and how you address them, especially in terms of demographics. I think it will also be a lot about discretionary spends, because discretionary spends have started to increase over the last good number of years. We've already seen the effects of that in the recent past, but it'll probably be more pronounced as you go by. It will lead to, let's say, behavior in terms of premiumization of products. Uh, Many of us will be seeking more and more premium services in various forms and across different kinds of sectors. It may be retail, it may be real estate, it could be even simple manufactured products or autos and stuff like that. So I think these are some of the key drivers which I think will shape up in terms of, or probably contribute to stronger growth going forward.
That is important, talking about the overall public expenditure and a lot of these reforms. But going forward, there are a lot of structural themes which are underestimated or under the radar like right now. Which do you think those are?
Well, I think in the current context and the backdrop that we are probably going through today, I think human ability is actually something which is most underrated at this stage. Okay. Everyone probably believes that AI is going to take over the world and most activities are probably going to be automated. I don't think that's going to be the way it will work. I think human abilities, human behavior will be an integral part. Yeah. It will probably go hand in hand in along with technology. Technology has been shaping our lives over the years, but I don't think it will work in isolation. So I don't expect a world where it will only be dominated by robots and humanoids and so on. So that's something which I believe is the most underrated.
But just from a market theme, if you could talk about some interesting sectors.
Well, I think one very important sector, and once again emanating out of the current backdrop that we've been facing in the form of the West Asia conflict, energy security is something which will probably become very, very relevant. I think in the last few years, particularly after COVID, we paid a lot of attention to things like indigenization, manufacturing, whether it be in defense or electronic products and the likes. We paid a lot of attention to probably themes like consumer technology and even financialization and so on. But one area which is a very large area on which the country is significantly dependent on the outside world has been energy. And it has come upon us as a revelation once again in this conflict. Correct. More so in this conflict compared to any other previous Middle Eastern conflict, because we're really constrained in terms of energy. So I think government is going to significantly push on energy security. We already outlined a program for renewables and increasing the mix of renewables, solar, wind, nuclear in our overall energy mix in the last 5 years. There are some very strong targets. But I think we'll have to probably do a lot more than that across various areas, maybe coal gasification, how to reuse coal in different forms. All those things will now come on the table, because we don't really want to be in a position of in a fix with regard to this matter. Luckily, we've been a country which has been significantly dependent on coal compared to gas, especially to light our homes and offices. And I think that has served us pretty well. We are still good to go from that standpoint. Yeah. But I think a lot of work needs to be done on energy security. So the whole energy power value chain, it's further getting a boost on account of AI, because that's creating its own demand for power and energy. So I think that's probably going to become a very relevant theme in my view, and of substantial size.
So looking at the overall market right now, energy security is the sector that you spoke of, but is the current phase of the market reminding you of a period that we've seen in the past that you would say, okay, it's akin to this period that we witnessed, or this correction, or this phase of volatility, maybe?
So when I look at it from a global standpoint, what stands out is that uh, uh, we are probably a little overextended in one particular form, one particular trade. Market's obsession with, let's say, technology, AI, is of a completely different magnitude today. And I think we've seen some of those, obsessions in the past in other at other points in time, uh, in the area of technology, as well as probably in other segments as well, whether it be consumption or whether it be financials for that matter. So I think the fact that investor attention remains very concentrated and focused on one particular segment is something which market tends to constantly repeat. It creates bubble type effects, and that's what I get reminded of at various points in time. Most of them have been led by technology cycles. So when you think of it from the Y2K standpoint in 2000 to then even things like cloud and so on, and now in the age of AI. But that is something which constantly keeps repeating itself, and that's something which I find is uh, keeps reappearing, and probably markets' response to that also seems to be very predictable. Begins with euphoria and then probably always kind of peters down into something which is
So are you saying it's reminding you of like what we saw with Y2K or like the tech bubble or something like that, akin to
absolutely,
that?
yeah. I think at times when you commit a lot of capital to one particular area,
Yeah.
that's something which reminds you of some of those outside tail risks, as we think of, which
Okay.
generally lead to situations which are difficult. Maybe at some level, even if you take off the global financial crisis in 2008,
It's akin to that, the markets?
I wouldn't say that, but it is. They are periods of excesses.
Okay.
Global financial crisis were probably more
Okay.
widespread because it had the ability to travel international borders, cross international borders, and probably affect various countries in different ways.
Yeah.
And especially because capital is something which doesn't respect international borders. Here, maybe it is a little different, but the way the market thinks about it, perceptions, temperaments, the way excesses get created, valuations go berserk. I think those are pretty similar in the current situation, or at least getting there if they have not already got there.
So looking at the markets right now, is there anything about the global markets that concerns you the most right now? What's the biggest risk factor?
So I think on a continuing basis, one I would say that geopolitics and geoeconomics will remain issues. I mean, they will probably come about uh, in a very significant manner at some point in time. They may
Yeah.
not be as significant, but they'll keep rearing their head every now and then and create discomfort in the markets from time to time. So I think that's something. Geoeconomics is another, and that is what has got added after this whole trade and tariff related challenges that we've had over the last 2-3 years. It started maybe even before COVID in 2019 in the previous administration, U.S. administration or Trump administration. Um, but it will continue. It is because some of the countries, like I said, are trying to reposition, especially large nations, large economies like the US and China. They're trying to reposition themselves, think differently compared to what they used to 20 years, 30 years, 50 years ago. So I think that will lead to geopolitics and geoeconomics becoming a regular feature going forward compared to what it has been in the past. So that's a risk which is continuing, will likely probably continue. The other one, of course, is the changing landscape of technology. Although I don't necessarily, like as I said, overthink that, because as I said, humans will have that ability to find ways in which they keep themselves relevant, even with expanding technology and newer technologies. So that to me is a more fleeting challenge or a more temporary challenge in my view. But I think the um, the whole you know, uh, urge of nations to look at themselves differently, position themselves differently, is something which will probably be a lot more demanding out of investors compared to past.
So, in a market where you have information that's available, where does one really create alpha from? That's
Well, it's not just about information. So I think there is it is important that we are in a position to process that information and convert them into valuable investment ideas. And I think that is where started off by saying that this whole mid small enterprises opportunity, which the way it is unfolding in India, and India has been a land of entrepreneurs, so it will continue to be so, and especially now in the new landscape of the world, economic landscape of the world. So I think that is something which will mean that we have to go deeper into understanding companies, understanding their ability to execute, their mindset for growth, their moats that they will probably have in order to defend themselves or probably grow faster than competition. I think if you are able to sense that, you can, alongside which also judge managements well, that will make the difference, and that is something which may call for some expertise, may not just necessarily be a function of information or reports or research available to you online, offline. So information availability is not as much as an issue. I think the ability to process that and convert it into meaningful investment ideas is something that will still remain relevant.
so. What is separating a good company from an exceptional company? What is that criteria? What would be the 2 or 3 things you think?
I think, in my view, it is once again, what differentiates is basically the hunger for growth in an enterprise.
Hmm.
Uh, the ability to reinvent oneself in a manner such that they keep themselves relevant. Think of a company like Titan. I mean, it's a large company. It's grown exceedingly well in the last good 20-25 years. And yet, if you think of it, today they've put out some numbers for themselves in terms of what their 2030 charter is.
Projections.
And it's intriguing that it is one of the large cap or large companies which still is thinking of growing at 20% CAGR in the next 5 years.
Hmm.
Most of them are actually struggling at growing
Yeah.
above 10%, 12%. So I think the ability to reinvent, to think outside of the box, and to thoroughly execute, I think that just makes that difference between a reasonably decent company and a very high quality exceptional company.
Okay, that's very interesting. The hunger for growth, reinvention, and the ability to thoroughly execute. Having looked at so many phases and cycles of the markets over the past many years, what are some of the classic mistakes that investors are still making that you really want to send across a messaging and saying, don't do this now?
So, getting ahead of yourself, getting carried away, I think those are common temperamental mistakes, and especially they happen in a bull market. You overextend, you try to extrapolate some of the trends which have happened in the last 2 years for the next 5, 10, 15 years. Uh, in the process, probably overpaying, and extending valuations. I think those are some of the critical commonplace mistakes. I'm not telling you anything which is very fancy,
Of
but it
course.
is still something which happens from time to time. People do get influenced by trends, maybe even fads, and want to chase momentum.
Mm.
I think this I still hear even today, even as of today. So if today it is semiconductors is the rage, and there are countries in the Far East which are doing very well, Korea or maybe Taiwan, and investors' attention is then entirely focused onto that, and they want to chase these very important, maybe relevant, but at the same time very
Trendy
extended, trendy
themes.
themes. So I think that is something that you would probably
Yeah.
want to be a little careful about. They always come to bite you in hindsight.
So, for an investor who's still a little bit worried about putting money to use and investing in the markets in the current scenario, what do you want to tell them?
Look, I'd say that any time is a good time. I mean, you don't
Yeah.
really, beyond a particular point, I think uh, at every point in time in the market, there'll be challenges. They will be different at different points in time. There was COVID at one point in time, and there was a global financial crisis at another, and now you maybe have AI and maybe conflicts and so on and so forth. So I think challenges come in different forms. They always, in hindsight, I think once again, if you keep to your investment discipline, you keep to things like following businesses which are reasonably decent, need not necessarily all be exceptional, but they could be reasonably decent companies. And I think if you buy them at uh, reasonable valuations, once again, you can't be significantly
Yeah.
wrong in your, even if you are not a very evolved investor. So you don't
Yeah.
really need a lot of expertise. I think these are basic tenets which many people forget, many investors forget.
Right.
If you just keep to that, I think you can end up with some reasonably decent.
Just stick to the basics, I guess.
Absolutely.
So, if you were starting your investment journey again today, what advice would you have for yourself? What would you do differently?
Well, I'd say once again, like I've realized over a period of time that temperament, psychology matters. I think if I'll just look back on some of my own investment decisions, my portfolio allocations, and so on, I think at certain important critical points of the market or critical bends of the market, I would rather use a little more of my heart than my head. I think that is the advice I would probably give myself, because sometimes you get too
The gut feeling.
exactly. So I think that gut feel, it all comes with maybe experience, I guess, and watching the markets and watching investor behavior.
Yeah.
But I think if you do that well, you can really, I could have really probably done much better in terms of my own investment outcomes.
Absolutely. Let's get into the rapid fire then. Are you ready? So, quick, snappy answers. Growth or value?
Both.
Okay. Large caps, mid caps, small caps. Where does your preference lie?
Mid and small caps at this stage.
Okay. One sector that you're extremely optimistic about? Energy security.
Energy security.
Yeah.
Yeah.
One investment myth that you want to bust?
Buy and hold as a strategy.
Okay. What is one habit that you think every investor needs to develop?
Reading
Hmm.
and ensuring that you are on top of your companies that you invested in.
Absolutely. Tahir, what a pleasure it's been interacting with you. Thank you for your
Thank
time.
you very much.
That was certainly an important episode, and we've learned so much from Tahir. The scale of companies and corporates has certainly evolved over the years, but while investing, do remember to stay the course. Don't become very emotional with your stock investments, but the emotional quotient and temperament is equally important. Energy security is emerging as a very interesting theme. Geopolitics and the geoeconomics is very critical and is the biggest risk for the global markets right now. The changing landscape of tech is something that's quite overwhelming, but the human part will continue to remain. The hunger for growth, the ability to reinvent, and to thoroughly execute is what differentiates a good company from an excellent one. Don't get ahead of yourself while investing. Don't jump onto trends. And do remember, any time is a good time to invest in the markets. I certainly hope you enjoyed watching this episode. Do remember to like, share, comment, and do subscribe to MF Bharat's YouTube channel. Thanks for watching.